Markets move when there is conviction. Simply put, markets move up when there are more buyers than sellers and move down when there are more sellers than buyers. When neither side is willing to commit, when conviction is absent from both camps, price goes nowhere. That consolidation may start broad, but the longer it lasts, the tighter the compression gets. In today's video, we discuss the concept of an equilibrium point. You will want to watch this because we give you an exact equilibrium price and an approximate equilibrium date that you need to be watching on Bitcoin right now. The word equilibrium originates from Latin and literally translates as equal balance or even weight. In the context of Bitcoin market analysis, think of the equilibrium price as the middle line in a tug of war, the precise point where the rope sits when neither side has the upper hand. Both buyers and sellers are pulling with equal force. The market is in a state of suspension, waiting for one side to overpower the other. Yesterday, we defined Bitcoin's price from a horizontal angle. Using Bitcoin technical analysis, we showed you the current Bitcoin ceiling and Bitcoin floor and gave you specific numbers to focus on. We will leave a link to that video in the description. Today, on the Bitcoin chart, we look at it from two different angles, diagonal and vertical. Using trend lines drawn from the most significant bars of February, we will show you a price that sits at the exact center of the current battle between buyers and sellers. And using the geometry of the structure those trend lines are creating, we give you a date to mark in your calendar. Watch to the end. Both are worth having. Welcome back. We are price action traders. Every day, our focus is just one chart, the Bitcoin chart. That singular focus is what makes us Bitcoin technical analysis specialists. Every day, we answer 5 key questions for you. Where are the key price zones? Are the time frames aligned? What is volatility signaling? What are the macro markets telling us? And what must change to revise Bitcoin structure? Today, those questions are answered through the lens of trend lines, triangles, and equilibrium. The higher time frame context first, and this is an important distinction. There is no downtrend established on any time frame. The higher time frame remains firmly up. On the surface, the monthly and weekly picture looks bearish, and we understand why someone looking at recent price action might read it that way. But a correction is not a downtrend. Neither the monthly nor the weekly has produced the structural damage required to call a trend reversal. What we have is a correction within an intact higher time frame uptrend. That distinction matters. In Bitcoin technical analysis, for a trend line to be valid, it must connect at least 2 points. A line drawn from a high must connect with another high or highs. A line drawn from a low must connect with another low or lows. The more points a trend line touches, the more significant it becomes. Let us apply that practically to what the Bitcoin chart is showing us right now. In yesterday's candlestick review, we identified the 2 bars that overshadowed everything else in February. The 5th February high at $73,168 and the 6th February low at $60,000. 2 adjacent bars that defined the entire month. Those same 2 bars are now giving us our trend lines. Take the 5th February high at $73,168 as the first pivot point and draw a trend line down. That line connects precisely with the 25th February high of $70,028, a descending line of resistance, 2 highs, 20 days apart, connected by a single line. Now, take the 6th February low at $60,000 as the second pivot point and draw a trend line upward. That line connects precisely with the 24th February low of $62,527, an ascending line of support, 2 lows, 18 days apart, connected by a single line. Notice what has happened here. The 2 adjacent bars of the 5th and 6th February connect with the 2 adjacent bars of the 24th and 25th February. The same pairing that defined the beginning of the structure is now defining its current boundary. 2 diagonal lines, one descending from the highs and one ascending from the lows, converging toward a single point. We now have a triangle forming on the Bitcoin chart. Some would call this a pennant. What both have in common is that they terminate, and that termination point is where the analysis gets interesting. To derive the equilibrium price, we take the range between the 5th February high of $73,168 and the 6th February low of $60,000, a range of $13,168, and divide it by 2. Add that to the low or subtract it from the high, and we arrive at an equilibrium price of $66,584. Call it $66,500 on a rounded basis. Look closely at the Bitcoin chart, and you will see that $66,500 is already acting as the balance point. Price is oscillating around it. The 28th February monthly close printed at $67,049, sitting just above that equilibrium level. The market is not at random price. It is at the mathematically derived center of the current structure. Equal balance, equal weight. Buyers and sellers locked in a tug-of-war with $66,500 as the rope. A breakaway from the equilibrium price of $66,500 is the first signal to watch. If price breaks above equilibrium with conviction, we then monitor how it reacts at the ceiling price identified in yesterday's video. If it breaks below with conviction, we watch how it responds at the floor price. The equilibrium is not the trade, it is the compass. Direction away from it tells us which side of the tug-of-war is winning. Now for the vertical perspective, in other words, time. The pinnacle of the pennant can be viewed from a vertical standpoint. Those two converging trend lines must eventually meet. Draw a vertical line at the point of convergence, and the calendar gives us a date in the window of 18th to 22nd March 2026. To be clear, we are not saying price has to reach that pinnacle. It could break out of the pennant tomorrow, next week, or any point between now and then. What we are saying is this: as long as price is working inside the pennant, the compression is getting tighter, and from this trendline structure, a breakout is inevitable. The date simply tells us when the geometry runs out of road. For those who have studied Weidi Gan, the early 20th century analyst whose work on time and price cycles remains influential, this date carries additional resonance. The 21st March 2026 is the spring equinox. Gan's studies identified seasonal equinox dates as historically significant turning points in markets. Whether you assign weight to that observation or not, the convergence of the geometric termination point and the Gan equinox date within the same narrow window is worth noting. We are not forecasting, we are observing. We now have both coordinates, a precise price at the center of the current structure and an approximate date when the structure expires. This suggests that for the next 2 to 3 weeks, Bitcoin may continue consolidating as the tug-of-war plays out within the triangle. Patience is not passive here. It is the correct read of what the structure is telling us for now. Let us turn to Bitcoin volatility for additional context. The daily ranges over the last 3 sessions show a consistent pattern of gradual expansion. The 26th February produced a range of $2,292. The 27th February expanded to $3,326. The 28th February, the monthly close, produced a range of $4,592. 3 consecutive sessions of expanding range. The direction of travel is clear. However, the total expansion from the 26th to the 28th remains under $2,500, measured, not explosive. The market is beginning to breathe more freely, but has not yet produced the volatility burst that would signal a decisive directional move. The triangle is still holding. The February monthly range closed at $19,344, broadly in line with recent monthly averages. As we close today, 1st March, we will have updated weekly ranges. That weekly close is the first data point of March and the first structural test of whether the triangle boundaries are holding. From a macro perspective, 2 observations are worth your attention. First, gold is starting to creep higher. The weekly price action is developing a pattern of higher highs and lower lows. As long as the 17th February 2026 weekly low of $4,854 holds, this points toward a resumption of gold's uptrend. In Bitcoin market analysis, we keep one eye on gold. The relationship between the two assets was covered in detail in yesterday's video, linked below. Second, the US dollar index. Despite stronger than expected PPI data released last Friday, the dollar index stayed muted. It did not respond as a strengthening fundamental picture might suggest. The price zone we are watching on DXY remains clearly defined, as covered in yesterday's video. Until the dollar index closes convincingly above that zone, we remain cautious about calling a sustained dollar rise. We are also watching the Chinese yuan's relationship to the US dollar, a dynamic that adds further complexity to the macro picture around Bitcoin. Let us bring the three perspectives into one picture. Yesterday, we gave you the horizontal levels, the ceiling and the floor. Today, the diagonal analysis has given us the equilibrium price sitting at the center of the structure, and the vertical perspective has given us the approximate date when the structure must resolve. Three dimensions of the same picture. The triangle is tightening, the equilibrium is holding. We are now on the 1st March. The structure suggests we could see chop for the next 2 weeks, unless price proves otherwise. When the break comes, above or below, the price levels from yesterday's video are the ones to watch. We monitor, we do not anticipate. Discipline over prediction. 3 angles, 1 Bitcoin chart. The structure will declare itself on its own timeline. Our job is to be ready to read it when it does. We publish every day at 7 a.m. EST. If today's Bitcoin technical analysis added clarity to your view of the market, consider subscribing. You will not miss a daily update. Comment below. Do you think Bitcoin breaks out this week or waits until mid-March? We read every comment. Structure defines context. Context defines edge. The market will have more to say tomorrow. We will be here to read it. Until then, look after yourself.